it's okay with everybody, we'll just kind of get started just so that, you know, we can be fairly prompt. I know you're all expecting a 2 o'clock start time. So I would just like to say, I'm just admitting a few people as they pop up. So a really, really warm welcome to everybody. Really appreciate your time when perhaps you'd rather be sitting in your garden or, you know, up a hill somewhere, Melanie, or down on a beach or whatever. So really welcome to Matt as well, who does have a lovely view outside his window, so I know. You've just been telling me about your gorgeous location up in, is it Peak District or Derbyshire?
Yeah, Derbyshire Dales Peak District, yeah.
Oh, lovely.
I was there on Saturday.
Ah. So we're quite spread out as well, aren't we?
Yeah, absolutely.
So Matt, really delighted to have Matt with us today as CEO of the Key Fund. And this is the Finance and Funding Your Enterprise webinar as part of our WiSE Wednesday series. I have had a little chat with Matt, and there may be some resources, fact sheets, links, etc. that will come out with your follow-up email that should come out tomorrow once we've got the final video edit. On the basis that we are recording this, it's really just to say if anybody is at all uncomfortable with either their name or their face, obviously please do feel free to opt out or take your visual off. We won't be offended at all, but we very much welcome you here. We are currently sort of looking at, I think this is number 6 in our webinar series. So they're very much about supporting the social enterprise sector. We do them sort of every fortnight. We have got down the bottom a chat function. So you're very, very welcome to use the chat function to ask some questions, and we'll kind of cover Q&A pretty much at the end. So if everybody would be happy to, if you pop yourselves on mute now, just so that we can all absorb sort of Matt and everything that he is going to share with us, all these amazing insights. So a little bit of about Matt, I guess, and what I've discovered, that he joined the Key Fund back in 2002, must have been straight out of school, straight after GCSEs, of course, Matt. So you've been kind of around the social finance and funding sector for, you know, sort of 16 years or so. You took a bit of a break, and then you came back into the Key Fund in 2016, 2015, and then it's kind of like after that sabbatical with the Big Lottery Fund, you've kind of taken on the role of CEO. And I have a fascinating fact about you, which is apparently you know how to dispose of black widow spiders. Who knew?
I'd like to say it was scientific, but it was more about blind panic. Yeah. When you import Volkswagens from California as a hobby, you tend to occasionally find visitors, and I found a whole nest of them.
Oh no! Oh no! So it really, not just even the one. I thought it was, you know, travelling around Australia or something.
No, it was in Doncaster.
In Doncaster. Oh, that's super impressive. So in terms of the finance and funding, I mean, we know that this is a huge barrier for social enterprises, for enterprises generally, but social enterprises do find it a really significant barrier. And I was kind of reading through the recent iSE UK State of Social Enterprise regional reports, which was interesting to have regional reports. And I think 25% of the total cohort all prioritised finance and funding as really one of their biggest barriers. So it's obviously really pertinent that we've got you with us today, and that we can kind of talk through some of those sort of ways that people can access funding. I know there's a real strong interest in crisis funding still, and then as we go into starting to look towards recovery, and then I guess with the Key Fund, some of it is about sort of looking at what investors may need from us. You know, are we collecting the right data? Do we need to be able to evidence our social impact, because that's actually an important factor within finance and investment that comes through from use. And all of that, I think, ties in really neatly with the sort of founding principles of the Key Fund around sort of communities, helping develop thriving communities and that jobs creation. So I think that localization is something that's really a vested interest for Key Fund.
Indeed. Yeah, absolutely.
Perfect. Right. Well, we're all ready. We're all waiting. I can now sit back. I can have a coffee, or but please do. So I think we're starting with crisis funding. Really, are we? As sort of a sort of bit of a wrap up of where we are with that at the moment.
Yeah, absolutely. And thank you for the kind intro. You make it sound much more exciting than it was. I've been around social investment and social enterprise for 18 years now. So I've learned a lot of things. Some of it is around what not to do, which is good. I'm a great believer in if you're going to make yourself some challenges, make sure the brand new original ones rather than the tired old ones that everyone else has done before. So I'm a great believer in kind of sharing that knowledge and helping people to understand that. I'm going to talk really broadly, both I guess around the funds that are out there, but also the distance from the social enterprise funds to the grant funds, because I think, and I'll come on to this, I think that the period we're in now is quite extraordinary, and actually a lot of the things that I would have been saying 6 months ago just don't apply now. I'm not going to really talk about Key Fund. I'm happy to talk to anybody separately, and my investment team would be delighted to talk to you, but I don't really see this as a kind of infomercial opportunity for me. It's about what can I share that's wider than that. So I'll be talking about that. So I guess going back to when this happened, none of us knew that we'd be doing Zoom calls like this, I don't think. Nobody quite knew how we'd adjust to this world and how long it'd take and what would happen. And I think to some extent we're still in that place. I think a lot of us, Key Fund included, we're a small social enterprise. We're still trying to figure out what comes next and how things will change and how we will need to change. And I think what was clear, sorry, kids are saying that it's breaking.
Yeah. I can hear you clearly. I don't know, obviously,
okay.
Sort of bandwidth on individual internet may be a small issue, but I think generally, yeah, kids,
sorry,
hopefully
kids,
you can hear enough. And obviously there will be the video, but I hope you can stay with us. And is that okay, Kiz? Yeah, carry on, Matt, sorry.
Okay, no worries. So I think pretty early on, I identified that the majority of our clients are early stage, small organizations trying to do difficult things in challenging circumstances. And I think that grant, and I've campaigned hard for this, that grant should play a big part of recovery. So in the crisis bit, that's what I'm mainly going to talk about.
Thank you.
So I think starting, I guess at the top, there are a number of government schemes, and I hope you're familiar with most of these. I'll quickly run through them. Hopefully it'll be helpful. I think probably the most impactful so far for the sector, and probably for most businesses in the wider sense of enterprise, has been the furlough scheme. Who's using furlough? Is anybody?
No, iSE definitely have, yeah.
Yeah, and we have with some staff. So furlough is the ability to claim 80% of costs of staffing for a period of time whilst those people are unable to work due to lockdown or due to circumstances, etc. So it's running until 31st of October. You have to have put people on furlough before the end of May. But essentially, it's a really important way in which people have managed to offset costs. It doesn't seem like it affects too many of you, so I won't go into too much detail. Wider than that, there's the discretionary relief on rateable values. And so there's two. So there's one that's on up to 10,000, which is for any small business. That doesn't pay rates, and then there's a retail, hospitality and leisure grant, which is up to 25k, and it also applies to nurseries. They've included them in that bunch. Your rateable value has to be less than 51,000, but it's actually a pretty good and simple application process to your local authority. One thing I would flag, if you've tried and you've been turned down initially, have a proper look at the terms and conditions and review them, because we've had probably about half a dozen clients who we've spoken to in our portfolio who said they were turned down, and we've gone back and said, no, you shouldn't have been turned down, and they've gone back and appealed and they've actually secured them.
Oh,
Clearly, 25 or 10,000 pounds, depending on your circumstances, is actually, not a bad sum of money to be able to bring in. So pretty useful there. There are then there's discretionary local relief, so it's worth talking to your local authority. So I've just been talking to a client before this call who got 30,000 from their local authority. So they got 25k as part of the retail, hospitality and leisure grant, and then they topped up with 5, which again, is really helpful. There's also 2 other schemes. So one is VAT deferral. I don't know if anybody's VAT registered, but there is the ability to defer VAT payments from between March and June through to March 2021. So again, if you are VAT registered and you've got cash flow challenges, actually deferring for effectively 9 months is really helpful in terms of just managing cash in the business, which is obviously very key at the moment. I'm moving on now to kind of there's 2 loan funds that are available you may well have heard of. So one is called B-Bills, Bounce Back Interruption Loan Scheme. So effectively these are loans up to 50,000 and they're available via the banks. I've heard that people are getting these within hours.
Oh, wow.
So they are repayable. They're interest free for the first year. The government pays the interest and it's 100% guaranteed by the government. So the banks are able to make decisions based purely on credit balances. So if you've got a bank account, most of the high street banks are involved with B-Bills. And as you know, it's hours to actual drawdown and interest free for a year. So it's a pretty good deal. Clearly the challenge on the other side is, are you going to be able to repay? Yeah. Because it is repayable. None of us know what will happen if people can't. And I think that's a big question for the government to answer. I heard that the figures are in the tens of billions in terms of the amount of bounce back loans that have already been done. So clearly, the government's attitude towards write-off is going to be key to that. So I think really people that are entering into that need to be pretty confident that they're going to be able to repay. And I think that will be really important. I'm not bashing the banks, but I think that, we've seen some of our clients who've repaid us and took money from because it's cheaper, because it's interest-free. I do worry about the attitude of the banks if people can't pay. And I think people might have had a different experience with us and with other social investors who are much more aligned. But, who knows? Hopefully I'm wrong and, they'll be brilliant and people will be able to move forward with them. There's also a bigger loan fund called C-Bills, which is the Coronavirus Business Interruption Loan Scheme. And again, that's run mostly through the banks. And this is for loans over 100k and up to 1.5 million. It's been really good for some of the big national charities who've taken hits on cash flow. So those that have got trading arms that they rely on. So a lot of the big national charities that have trading arms, the charity shops, and they've lost all that income, have gone to this scheme and are hoping to be able to repay with future income. Some that have lost income because of just lockdown generally. So I know there's a few where they make substantial amounts via sponsorship from the London Marathon.
Yeah.
And they've gone and borrowed that money to keep services running now for the benefit of their beneficiaries. And when the marathons run, the income will come back in. So I think it's quite interesting, CBILS. There's a sector-specific one that's called the Recovery and Resilience Fund, that's available via the Social Investment Business, which is a social investor. Great people, and I think interesting if you are able to sustain that kind of debt. But I don't know many of our clients who are at that level, but clearly it's helpful for some of the sector. And again, there's another fund called the Future Fund, which is for equity-based businesses. There are some social enterprises that have equity, but it's kind of 125k up to 5 million. I don't think there'll be many social enterprises that we work with that will be looking for that kind of money.
And I think it's really important, isn't it? The differentiation that you've emphasised within that is there's a lot on the grant side of things, mostly coming down through government, but just being super aware. Is it a grant? Is it a loan? If it's a loan, what have you got to repay? When have you got to repay? And how long have you got to repay? So that you can actually remodel, do that finance remodelling for your enterprise.
And I think given the uncertainty, the challenge to both trade out, so to be able to get back to where you were, will be significant. If you're carrying additional debt, then having to trade up to sustain additional debt, it feels like something that people really need to consider. And I think that's why when I move on to talking about the recovery, that's why I think debt doesn't play a role for most of our clients. I don't know all the individual organisations you're involved in, but certainly the majority of ours, at the moment are struggling just to kind of keep the doors open. So I think it needs to be considered.
It's that founding principle, isn't it, for us as social enterprises, that we do trade. We're not. We all probably perhaps feel a little bit uncomfortable about the fact that at the moment we're kind of out there looking for free money, which normally falls into the third sector. And we've chosen to not be charities. We've chosen to be social enterprises because we have that pride and belief about trading our incomes. So there's real paradox there at the moment for many, which might feel quite uncomfortable for social entrepreneurs because they are so passionate, so personalised around their goods and services that they deliver.
Absolutely, and I've had a few moments of quiet contemplation where I've thought, I've spent 18 years charging around the North and Midlands of England, telling people, trade leads to sustainability, leads to independence, makes you more robust, cushions you against economic shocks. And who knew that it was going to be, all economies, all sectors, all geographies stop at once. And in some ways, the really difficult reality is people that have grants within their mix are more sustainable at the moment.
Yeah.
Now, as we move back to, something more like a normal reality, I think that will prove true again, that those that, and potentially if there's further, public sector cuts and there's pressures on grant funders not getting returns from their legacies, I think that trading will come into its own again. But clearly in the current circumstances, it's quite a different picture.
We don't know how long that journey is. Even I think probably most of us are now beginning to go, what does rebuild look like for us? That certainly, even with the, panacea of all the, pubs and hospitality and hairdressers reopening kind of thing, it's not just going to spring back to where it was. And I think people are still struggling from some of the previous webinars that we've been running to actually even kind of do that future scenario planning. What will my business look like? What will my markets look like? And then obviously that underpinning that has to come through from funding and finance.
It's incredibly difficult, and we're talking to our funders, and that's something we did really early. And I still don't know what we'll need to do for our clients. It's I've got some ideas, but I'm not wholly confident that I'm going to be right. Let's face it, if any of us knew what was going to happen next, we could write a book and fund our own social enterprises forever on the proceeds and just do the after dinner speaking circuit as the answers. But it will be, it will be difficult, and it probably won't be what most of us expect. I think, one of the threads of comfort that I'm taking is my initial predictions of what this might look like haven't borne out. So it isn't as bad for our clients as I thought it would be. Hopefully, it never gets to as bad as I thought it would be, and that's great. And I can just paint myself as a dour Yorkshireman that always sees the worst in things. Okay, so moving on. Oh, the other thing I would just say is, if you have contracts or existing grants with somebody at the moment, go and talk to them. What we've seen is incredible flexibility with particularly grant funds, but also, again, I mentioned that we've helped people to understand and challenge some of the decisions around the retail hospitality grant. We've also had people where their contracts have been suspended, and the government have told public sector bodies that they shouldn't suspend payments. They should continue to honour payments even if services can't be delivered. So we've actually helped clients to do that. So it's worth just asking the question and pushing back a little bit, because those can be used to fund you, and your requirement for the money starts to diminish. So on to recovery. There is lots and lots of things happening. Really, I think part of me worries that it's a bit late, if I'm honest, but I think that there is a lot happening, and there will be a lot of things launched over the next few weeks. So I'm just going to run through some of the things that I think are there in the wider, and this is a kind of overlap between crisis and recovery, because it isn't a clear boundary. There's actually a whole bunch of things, but these are the kind of more independent trust foundations that I think are out there who have funds available. One that I think is quite pressing, so it closes on the 29th of this month, is NatWest have got a fund called Social and Sustainable Capital, who've got $1 million to invest in grants of 5 to 50k. Say the deadline's the 29th, and it's particularly targeted at those that have people who are disadvantaged or vulnerable groups involved. But that's a really, it's a really good fund. They launched it, I think, a week or so ago, and they close it in a week. And then, I think it could be really helpful for people. So I'd encourage you to have a look at that. There's then a whole bunch of the lottery-based funds that are big sums available at the moment. So National Lotteries Community Fund, ex-Big Lottery Fund, have got 200 million to invest. They are doing from practically 1,000 up to 100,000, and there's some grants that they can do. Yeah, Philip at NatWest. That's the sustainable social sustainable capital one. But the National Lottery one, they are delivering now. I would encourage people to look at it, particularly sums under 10 and more like their awards for all. So they're pretty quick and pacey, and they can be for recovery or for crisis, or just delivery of additional services to beneficiaries who are struggling because of COVID. So I think really nice flexibility in there. And linked to that, there's an Arts Council fund that is, I think, 100 and odd million. There's a Sport England fund that's 195 million. There's a National Lottery Heritage Fund, which is 50 million. So there's a significant amount of money going through the lottery distributors. So whatever you're doing thematically in terms of one of those, I'd really encourage you to look at them, because I think there's a lot happening there. Then there's people like, there's a small fund that CAF, Charities Aid Foundation, are running up to 10,000, which I'd recommend looking at. There's one through WRAP, which is Waste Resource Action Planning, for people who are involved in recycling and reuse, that I think is interesting. And then the community foundations, your local community foundation there, they have sums from the National Emergency Trust, which is a growing pot as more people donate money to that. That increases, and they're distributing that. Again, it's mainly small grants of about 5,000, but they are.
That's significant to a micro entrepreneur or a sort of a self-employed person working as a director of a social enterprise company. So,
and they tend to be quick and easy to get hold of, which if you just can bring in a few small sums to offset some of the bigger amounts and work on a longer term, I think it's really helpful. So all of those I would recommend looking at. There are going to be some announcements in the next week to 10 days, I would say. So of kind of social enterprise specific funding. Certainly about 30 million for social enterprises and community businesses. So I'd just keep your eye on the kind of sector news, and we'll be pushing it really hard through our Twitter at Key Fund. So if you follow us, and it isn't about getting our rubbish, it's just about, we do tend to put a lot out about other things. And we'll be pushing those out. Same with our LinkedIn, same with our Facebook. Alternatively, drop me an email. But we'll be pushing really hard on that, because I think it's really important that those funds that are very tailored at social enterprise are starting to come through. And there's a whole bunch of people involved in those funds. I can't say too much because everybody's that's involved isn't allowed to say anything about who it is, but more detail.
That's enough. We'll all be signing up for your newsletter.
Absolutely. Yeah. So yeah, lots to come, I think, and hopefully will be helpful to organizations trying to adapt and trying to change. I think the big thing about recovery will be probably two areas for me. One will be around adaptation, so particularly people who are delivering services direct, so small capital if you're in a building, or adaptations to the way in which you deliver those services. The other one is kind of working capital and cash flow, so the breathing space to get on and do it, and then sell. And I think that's where most funds are now turning their minds, and a lot of those funds that are orientated in that survival recovery space, Flip, will be looking at how you do that. Certainly we've been doing some work on Power to Change's some assessment work for them on their recovery funds and crisis funds, and there's a kind of sweet spot that people are now getting into, which is saying, okay, I'm through the worst, I need this much to make sure I get through, but then I'm going to need this sum to move into the next phase. And I think that will be where we go. Over and above that, yet to emerge, as well as the funds I've mentioned, is that Power to Change will have a recovery fund for those more community focused, geographic social enterprises, community businesses. They're looking at, they've got 5 million that they've announced will be coming out. And there's also additional funds coming through a foundation called Access, which is distributed by a bunch of social investors. We don't quite know what those look like, because clearly everyone's trying to work out what the world will look like. But I think there's much more to come. And I know that lots of us are trying to work out what recovery looks like, probably in the same way that you're trying to work out what recovery looks like.
Do you think, in terms of some of the recovery funds that you've talked about, and ones that may be coming up for the sector over the next few weeks, it's a good time now to be really, now we've got out of that sort of survival mode perhaps, but to be really looking at, what am I adapting, how am I adapting it, what do I really need to make it work? Because just moving content online, we know it doesn't just kind of go from your desktop onto an online training program. And I know there's a few people, so I can just see Melanie Glass making quite a few notes, and I think for your business it's you do a lot of baking and cooking classes for vulnerable people within the community. It's not an easy translation to just go online and still either recruit people because they don't have technology at home to take part. The experience isn't the same because it's as much about the chat in the room and around the kitchen as it is about, look, I made these cookies, or I've made a curry kind of thing. So really sort of getting into some granular thinking about what are you adapting, how are you adapting, why are you adapting it, and is that going to actually meet your market needs? Presumably those are the sorts of things that we really, as social enterprises, we need to be able to evidence and back up need as well as change.
I think there's a few key questions that everyone's asking at the moment. The first one is everyone wants to all the funders that I'm talking to want to understand what was happening before.
Okay.
So there's a rightly or wrongly, there's a really clear desire that the support goes towards those organisations that were managing to deliver sustainably or were on a journey towards that previously. I think that there isn't an appetite to say, well, it was failing before, and so people are wanting to kind of help those that have been most impacted. That if it hadn't have been for this, would have been on course. There's a desire to understand what impact COVID's really had and what people have done, and I think being really clear about what that really looks like, down to numbers, but also the way you've had to change services, and I think being confident about the changes you've made, because we've all had to be entrepreneurial, and I think that's a really important thing. If you're backing someone to get out the other side of this, the entrepreneurialism, the adaptations, the pivots that they've made before in the crisis are kind of going to put them in good stead for what comes next, because said many times, we don't know what that looks like. So,
is it important that people are perhaps quite honest as well, in that conversation, because obviously, presumably, first of all, it's a bit of form filling, but then there's a bit of a dialogue in some way, and actually saying, well, I did try this and that didn't work, but what I've discovered is the feedback of perhaps why it didn't work, and that's led me to this second stage thinking. Is that important?
Yeah, absolutely.
Rather than overlooking it and sort of pretending, oh, we tried something and it was magically wonderful.
So whenever I do a talk about social investment in normal times, I say, be honest, good and bad, because if you're honest, at least it answers a question, because more than likely we'll find that something not quite right. And if you've already addressed it, that builds trust. And actually, in a funding relationship, that's what it's all about. I think ultimately you're trying to build trust and understanding with each other. So being clear, who doesn't make mistakes? I've got probably a list as long as my arm as things I wish I'd have done slightly differently through this, and that's before all the other stuff that I've done down the years. But you learn from it and you adapt, and I think that's really important. There is no risk-free grant, investment, whatever. There's always a risk, but understanding it, trying to mitigate it, is something funders should be doing together with people who are applying. So I think that is really important, that there's that honesty there. I think, look at the, people are going to look at your reserves, be clear about what you've got and what that really means and what it can be spent on and what it can't. A lot of people don't really appreciate. So again, the organisation I was talking to before this call had 6 months reserves. It was under 100,000. They've got 1 million's worth of property. It only takes a roof to kind of start leaking and a boiler to go in across 3 buildings, and all of a sudden the reserves don't look that healthy anymore. So, understand your reserves, understand what that means, be clear about that, and push back on your funder. If they say to you, you've got 4 months of reserves, you only need 3. If you know why you're keeping that back, then be forceful. Don't be shy about pushing back.
I think there was a prime example of that this last week, SEE for Fireside, when we had those few sort of downpours, and they had a torrential flood throughout SEE for Fireside, and they've lost, everything from desks and flooring, and obviously sort of walls that have got damp, as well as, materials and goods and products and everything that they'd sort of gathered for their customers, kind of thing. And it was huge, and you just think, well, it was, it's a fairly short, sharp downpour relatively, but it happens.
Yeah, well, we were flooded in November, our building, so they've got my profound sympathies. It's horrible, and that was a day's deluge. You know, the river rose 13 foot in something like 7 hours. So yeah, no, that's terrible.
Being really clear about what your reserves are and where you think that, and having done that sort of SWOT analysis of where you think that risk is as to why you need those reserves.
Absolutely, absolutely. And I think that's true of, you know, all of those things are true of crisis or recovery. You know, really being clear about where the risks are, what you understand, what you don't understand, or what you can't predict, probably is more accurate, is really important. You know, all of us are stepping into the unknown to some extent. So I think, you know, being clear about what those are, and I think have a plan B and C. You know, it is likely to be different to whatever you expect. You know, whichever one you pick, it's likely to be another one.
Well, the social enterprise sector are nothing but adaptable and responsive, and innovative. So.
Absolutely, and you know, I've Key Fund for the last 5 to 6 weeks has been doing grant assessments. I've turned a social investor back into a grant deliverer, which is where we started in 1999, and I never ever thought I'd do that. But actually, it was the right thing to do for the sector. It was the right thing to do for our clients. And actually, it helped to bring some income to us as a small social enterprise, because our clients can't pay us at the moment. We're not getting income in from that. So, you know, just thinking about what comes next and how things segue into each other, I think is really important. So that's it in kind of key tips in terms of what people are looking for at the moment. And the main driver for me is just that relationship. You know, be honest, be clear, and you know, if it isn't working, push back or find another funder. There is going to be a lot of money, I think, out there. Some other tips just that we've kind of picked up from working with people in the current crisis. So one is around landlords. So what we've seen is a lot of flexibility. Those of you that have offices, spaces, creative spaces, I'd encourage you to talk to your landlords. We're seeing a lot of flexibility. A lot of people seem to be really thinking about what they can do to support, how they can help keep cash in the business, which, you know, when it all comes down to it, that's what most of us need to be doing at the moment, making sure that we're keeping that.
So if you can't access your own funding, and therefore you're concerned about being able to pay your rates or your rent or whatever, actually speak to your landlord, because they may be able to apply for funding, which would mean that they can pass on sort of easing space to you.
Absolutely. One that we spoke to has said, so a number of our clients that we've spoken to, the landlords have actually made some change and reduced them or completely removed rental for this period. Some, and I think this is quite interesting. So one of my team told me about yesterday was that they'd said, okay, you can't pay us, we're going to reduce your rent, and instead of charging from you, if you want, we'll take it from your deposit.
Okay.
So whilst they won't get it back, they're not planning to move. So they're reducing their deposit and keeping cash in the business at the moment, which I think is quite interesting. So there are people being really innovative. I said it before, say it again, talk to your existing funders, talk to your existing contract holders, and there is a lot of potential there. I'd say be smart in where you apply. There are so many funds, you could spend the rest of your life kind of filling in application forms. So read the guidance notes and really make sure it's the right one for you. And just be thoughtful about that. I'd hate people to be, you know, using time on ones that they're not going to use. Have plan B and C in place. And then the other one is just, I think we're starting to see some really interesting things. Use your beneficiaries, use the people that you are working with to try and get the message out about your organization. There are some really interesting things people are doing on Crowdfunder and on GoFundMe and things like that around, and Virgin Giving and all the other ones that are out there around raising money from people who actually care in your communities. I think people are really now starting to think about what happens in the locality, the impact of this on people. And there's something quite powerful about that. So I'd recommend maybe thinking about how you use your beneficiaries to help you to maybe raise money in different ways, to attract funds in from different places. There's a lot of kind of self-help going on, and I think, you know, that's an interesting route. Yeah. And clearly, if you can raise money that way, it double bakes people in, so it brings a loyalty that you'll never get from another funder. So
I think one of the things that we've definitely seen through COVID is actually this rise of independents, and particularly independents in the high street that have been able to stay open. And I think that groundswell loyalty, as you say, we can never move away from the big corporates, whether it's in the high street or elsewhere. But actually, there feels like, in terms of that belief in civil society, an opportunity as well in this rebuild to really look at how we, use our independence and support artisans and support social enterprises. People are making perhaps slightly different judgments and decisions, and even with the big corporates, we're seeing people are kind of, well, you didn't treat your staff terribly well through the COVID thing, so actually I'm more interested in this company over here, and I hope that values piece, that kindness and that sense of community kind of does flow through. And I think the high street and all of those small independents have some real power potentially in the rebuild and how we recover.
Yeah, and as I say, we've seen some really interesting things. I know Crowdfunder, for example, have kind of waived fees for fundraising. Whether it's general support to what you're achieving, whether it's buying your product or service, or it's prepaying for things. There are really interesting things happening there. So I'd just say I'd be open-minded to kind of looking at some of the different routes for support. And then the last thing, I guess, is just kind of believe in yourselves, and the fact that it's really hard and you should give yourselves a break. I know that I've had moments, and I'm not ashamed to admit, where I've kind of looked at the wall and gone, as a leader, what do I do? What's the thing that kind of makes this happen? What do I do to make the difference to my team, to our investees? And I actually think it's just, be clear with your values, but be kind to yourself, because there's a temptation to kind of not self-flagellate, but there's a temptation to kind of see it all as our responsibility and our failures, when actually this is unprecedented, and you're all doing your best and you'll do great.
Thank you. That's amazing. And certainly a really lovely positive note to finish that sort of speaker session on. So thank you so much, Matt. That was absolutely invaluable and really interesting to listen to. I appreciate that finance and funding isn't always the most stimulating topic. Everybody has stayed awake, and actually, I think that, actually really absorbing. So that's been great. Please do feel free, unmute yourselves, and if you've got a question, anybody kind of want to pop a hand up and ask Matt something while we've got his very valuable time for the next few minutes. Hi, Kiz. Yes, you're on mute. You need to unmute yourself, Kiz. Yeah. Perfect.
Thanks for that, Matt. I just wondered if BenComs were a popular legal structure to receive funding from the kind of places that you talk about. So I was considering setting up as one, or a charitable CIC, maybe with a small membership.
So most of them will look at BenComs. So they're if other people don't know, it's a form of industrial and provident society, so like a cooperative, but it has locks on it that are much more like a community organisation. So there's limits on votes, there's limits on the way people can invest and the votes that they get. It's been used a lot for community pubs and community shops, really interestingly. There are lots of funds that will look at that. We certainly will, and any funds that we deliver. Power to Change love BenComs. And it's a very legitimate structure, and actually a very interesting structure, because it's one member, one vote, no matter what you invest, which I think is very democratic and actually is very in keeping with the sector. So there aren't many of those that I think would say that that's not a structure for us.
Okay, thank you for that. Cheers.
No
Thank
problem.
you, Kiz. Anybody else got a quick question? Oh, Carol, hello.
Yeah, hiya.
Carol from Coventry.
Yeah, from Coventry, but spend most of my time working in Birmingham. I've kind of given up on my home city. And that's where the question is, how do we bring the key players to the table in where they don't really understand the social enterprise sector, and how do we join that together? Because I'm part of the Build Back Better campaign, helped set up the social enterprise city, really promoting that, and working now with Key Fund and Public Health England to do some masterclasses about how we develop and grow that. But I really want to, how we drive that to, so they're not so scared to invest and not so scared to understand what it is to move forward.
Gosh.
Over to you, Matt. Answer that one.
So I think it's really hard, and I think the case that will win out is probably making the economic case, but with the impact case. I don't think it, for all the talk of social investment and data and impact and outcomes, I actually think it's stories and numbers of the economic impact that will make the difference with those constituents that you're talking about. I think it's really hard. You know, we're based in Sheffield. We started in South Yorkshire. We are arguably the oldest social investor. We have invested more deals than anyone else, although, you know, volume, we're tiny in terms of financial volume. Our relationship with Sheffield is we can't break through. They're not interested in us. And you'd think they'd embrace us. I would, you know, especially because we're a social enterprise city. And yet we're not, you know, we're one of the last ones they think about talking to. I don't know. I think it's just those 2 points: stories, and then the economic impact, what it really means. And I think it's just hammering it again and again and again and again.
So it's really about collecting that social impact outputs and outcomes and evidence.
It's the stories that always get people, though.
Yeah. Mm-hmm.
I mean, we've got some great videos with beneficiaries on our website, and it's that gets people's imagination every single time. I did a presentation to the partners at European partners at Ernst & Young, so kind of top senior management, and I showed one of our videos, and this big kind of Belgian guy came up to me, and I thought, oh, what's he gonna, you know, thinking, I don't know what he's gonna do, what is he gonna ask me, because, you know, these are pretty high powered people. Just gave me a massive bear hug and said, "You do amazing." I was like, yeah, that's what those do, not me. So I think it's the stories for me and the economic numbers.
Thank you.
Sorry, I've got nothing more scientific than that. If I knew the answer, I'd have cracked it by now.
That's brilliant. I just wanted to say a real thank you to Matt and to all of you for an hour, I think, really well spent. So I'm sure that we'll be going away and just kind of like rolling over some of the things that Matt shared with us today. So huge thank you. Really, really wonderful. I enjoyed that. Just for everybody to let you know, the next WiSE Wednesday webinar is going to be on the 8th of July. It's going to be 10 o'clock. And we have Kevin Davis, who is the Chief Exec of the Vine Trust. They have multiple social enterprises, including hospitality, schools, etc. So it should be really interesting to get his view. And it's going to be about levering localism. So that, again, kind of interestingly, actually, with some of the things that you've talked about, it sort of flows through quite nicely. So I'm going to wish everybody a really lovely day. Go and grab some vitamin D out there. It's a lovely, lovely day for most of us. I will send the follow-up email through to everybody, and thank you very, very much. And hopefully see you on the 8th of July.
Nice to meet you all.
Take care. Thank you.
Bye.
Bye.